This is NDTV, and you're watching Classics.
Today we are joined by a very special guest, Dr. Shubhashis Gangopadhyay, who is also the advisor to the Finance Minister. And in these tough times, he is one of the man Fridays in the ministry who is supposed to handle the inflation situation and bring the double digit down. Dr. Shubhashis Gangopadhyay, welcome to our show. My first question, how gloomy is the picture? Today the inflation numbers have touched 11.63%, up from 11.42% that the economy had witnessed last week. How bad is the picture?
First, let me give you a clarification. I may be Man Friday in the Finance Ministry, but I'm certainly not going to bring the inflation down. Right? The Minister and his team will try very hard to bring down the inflation as much as possible. Now, coming to the more serious issue of what is happening to inflation and the fact that the inflation numbers are out and we have gone up to 11.6. As has been stated before many times by both the minister as well as almost everybody in the ministry, and if you just look at it from the outside and do your calculations, you'll see that this inflation, unless prices start absolutely coming down, the inflation is not going to come down, right? So it will stay at around this level for some time, maybe even go up a little bit more.
You're saying go up a little bit more. What is the kind of band that we can expect? Though, of course, you will say that it's very difficult to make any kind of a projection, but can we expect it to move in a band of say around 12 to 12.5%?
All that I'm saying is that suppose the inflation was or the price index was 100 for 10 months last year, right? And this year in 1 month it went up to 110 and then stayed at 110 for the rest of the 10 months, right? The inflation in each of those months will be registered as 10%, right? So even if prices, stop rising completely, even then you will have 11+% inflation, right? So in that context, what is being said is that this inflation will stay for some time. Prices will have to come down in an absolute sense for the inflation to come down. So if the prices continue like this, right, and if the crude oil does not keep on rising even more, right, then sometime next year, right, we would expect to see prices coming down to single digit and lower.
You did also mention that even from this 11.63 that we are seeing right now, there is a possibility of an upward movement still continuing. Is that right?
See, you do not want a completely, an economy where all prices are totally stable. That's not good for business. So that, week-on-week inflation will continue for some time. That seriously is not the problem. The problem is that over last year, because of the crude oil price and the world prices of primary articles, which includes food, right, which is the biggest problem, the prices have gone up. And we are trying to keep it steady, as much as possible at that level. But even if we succeed in doing that, it will still be double digits for some time. That's what I'm trying to tell you.
What is the scenario like actually in terms of the indices that we're seeing in terms of prices of manufactured products and primary articles, including food articles?
See, there are certain items that you can identify in any week or during any period of time which has grown more than what it had in previous weeks or more than what other products have done. So I guess that is not the issue. We cannot go commodity by commodity and try and control it, right? That would be a dangerous thing to attempt, right? Because all prices are linked in some way or the other, right? For example, if petrol prices go up or diesel prices go up, right, it will affect transportation overall. But some commodities may be affected more than other commodities, right? So that is not the issue, going down to that level of disaggregation. But if there are certain commodities which clearly are getting out of control, then they will be directly looked at, right? For example, the minister has been trying very hard to control, steel, iron ore. Why? Because they affect every industry, right? After that use these types of products, right? So in that context, one identifies a commodity, but one doesn't identify every commodity and try and monitor each and every commodity. But commodities which have a lot of linkage, especially forward linkages, right, and affect the rest of the economy, right, those are the products that we are following very, very closely.
So what are those products that you are actually looking at, and what is the kind of projection that you have the next couple of weeks? Do you expect them to be the worrisome areas?
Well, as I said, we can form expectations, right? But the thing is that, for example, last week, right, we had thought that the inflation would have been a lot more than it actually was, right? This week, right, it's more or less, we were expecting this. So we do have some expectations, right, as to when we should seriously step in, right? When we are monitoring, we have to tell ourselves that what is the threshold beyond which we should do something, right? We don't want to stop the markets from working themselves out because there's a lot of adjustment going on. Nobody expected the oil prices to behave like this. So the market itself is adjusting. We don't want to interfere with that adjustment, right? But when the costs of those adjustments, because of particular products which are of importance, either primary articles like steel and ore, or food articles which makes the poor very vulnerable to if the prices go up, those are products we are trying to follow very, very closely.
Right. So that's where the price pressures will continue, even in the coming weeks?
Well, it's not a question of whether the price pressures will continue or not, right? The thing is that we are not, as I said, have identified in any way, and it will be very difficult to identify. You can also try it. Anybody can try it, to identify, prices which will go up very fast, right? You can rest assured that if that was identified, and if that was an important product, then we will definitely have looked at it, right? Even before you ask the question. That I can assure you.
Is it likely that the government will step in again to control prices? I mean, do whatever best possible in its...
Well, why do you say again? Because the government is on the ball all the time, right? As you can see. Every week, every day, various attempts are being made, discussions are taking place to ensure that inflation doesn't go out of hand. So clearly, whatever is necessary, the government will do.
But in the sense, in terms of the options, the policy options, what are we looking at this stage? Because the finance minister and the rest of the ministry officials have made it amply clear from time and again that the first line of defense is going to be Reserve Bank of India, monetary measures coming from there. The sense that everybody has been given is that there is very limited possibility of anything further coming on the fiscal side in terms of deeper tax cuts, quote unquote, or even some kind of a tax tinkering upwards in terms of excise rates.
See, increasing taxes will not work, right? Because they will definitely fuel inflation. So the question is essentially reducing taxes or directly subsidizing, right, to the consumer so that they don't pay the higher price. Now, when you reduce taxes, you run the risk of giving up revenue. And when you increase subsidies, you run the risk of increasing the expenditure. And both of this have a huge effect on the deficit. And if your deficit grows, if the government's deficit grows, right, then it again affects inflation. So the problem with fiscal measures is precisely this, that you can step in and control a particular item, but then it will be at the cost of generating overall inflationary pressures, right? So that's the trade-off that you have to take. With particular items you can focus on, but the moment you do that, you increase your deficit and that has an overall impact on inflation, right? So that's a problem with fiscal measures, and therefore fiscal measures have been tried, many of them have been done already, but as of now, right, it is monetary policy on which we are banking.
So when you say that government is keeping a watch, government is monitoring, what is the sense that consumers can get at large? Because inflation is still there.
Inflation is still there, and consumers at large, frankly, will have to accept the fact that this has nothing to do with anything that is fundamental to the Indian economy. Right? You see, earlier when food prices went up, what did we do? We very simply imported and kept availability high within the country and therefore prices low. Now if we try to do that, right, if we open up our economy and try to allow the international market to determine prices, instead of prices going down, it will go up because international prices are
extremely high.
Indeed, India has kept a lid on its food price rise compared to most countries, right? So in that sense, we cannot follow the usual principles that we had followed before, right? So we are in a peculiar situation where things are not fundamentally wrong in India, but we are being exposed to global parameters. And therefore all I can tell customers, which includes me too, right? What I tell myself is that we have to cope with this inflation. So the real issue is how we cope with it, right? It is very difficult to control it and bring it down to 5% overnight, right? Let us not give false hopes. Right? The government cannot do anything about it because we still have to import oil, right? Whose prices are not coming down. Indeed, they're going up, right? So in that context, right, that is the thing I can tell customers, do as I do, that is keep telling myself that we have to learn to cope with this. On the other hand, the more important issue for the government is, as I said before, food articles are going up, and there are a lot of people in rural India, among the urban poor, right, for whom this is a much more serious concern. Right? And it is on that that we are keeping a watch out.
Right, but then is anything been planned on that front, or is it just simply monitoring and keeping a watch?
Now, you don't monitor just for curiosity, right? So obviously,
but are there any particular steps that are being planned?
You can criticize the government however much you like, but we are not just curious people looking at things. So obviously the purpose of monitoring is to step in whenever necessary, in whatever way that is called for.
So would it be more from the subsidy side, or is there any other policy option that?
I told you that only, you could do either, in fiscal policy, what can you do, right?
Subsidies and taxes.
Subsidies and reduce taxes. And is there any room for that? I don't know. You tell me there is room for that without increasing deficit and bringing up inflation again.
Yeah, no, but you said that, okay, keeping a watch so that, I mean, obviously we don't...
For specific items, we are keeping a watch indeed. As I said, items which have an immediate impact on certain vulnerable sections or on the rest of the economy.